Blockchain Show is a podcast that demystifies cryptocurrencies and distributed ledger technology.
Hello and welcome back. You're listening to The Blockchain Show. My name is Ethan Kinderconnect, and this is episode 205. Today we have a special guest. I'm talking to Alexander Blum, and we're talking about 2 Prime, and we've got a lot to go over. But before we get into some of these topics, Alex, I just wanted to welcome you to the podcast and thank you for being with me today.
Hey, thanks, Ethan. It's a pleasure to speak with you. You've done a lot of podcasts. I'm above 200.
Yeah, it's hard to believe. It really is. It keeps going. I mean, I'm amazed how there's always something new and exciting to talk about. So that's kind of why I was looking forward to this conversation because, well, a lot's changed. If we would have spoke 2 months ago, I'm sure we would have a lot of different things to talk about. But just to kind of introduce you a little bit to the audience, if you wouldn't mind, maybe just tell us a little bit about yourself and how you got to where you are today.
I'm Alexander, or just Alex is fine. I am managing partner of a financial investment management company called 2 Prime. We currently have a few different structured products in the crypto space. So basically using various derivative strategies to manage risk, to offer kind of what look like traditional or mainstream investment products, but applying those into crypto assets instead of public equities or real estate or something people are more familiar with. I've done, a ton of stuff throughout my 33 years on Earth, but first got into crypto in 2012. I had just come back from living in the Peace Corps in Panama, where there was no phone service, very limited internet service, no electricity where I lived, and was very interested in ways to figure out how to do remittances inexpensively to some of the people that I lived with in the jungle. And so I originally learned about Ripple and the kind of Ripple network of lower cost international remittances, and they were allowing you to use Bitcoin to send money internationally. Thought that might be a solution because the people I lived with were, it's like an indigenous tribe. They didn't have bank accounts. They didn't have anything. And so kind of started learning about it through that. And then when I was in grad school, I worked for a venture capital fund that was very early into the crypto space. And they kind of had me do odd jobs, as almost out of pity, just to give me some work to do. And that had to do with Bitcoin mining and investing and evaluating some early Bitcoin and crypto companies back in 2013, 2014. And then as the market started becoming more popular, learned, had just a bit of experience when everybody else kind of was just trying to get into the space. And so was able to do stuff for the Gates Foundation, the World Economic Forum, and eventually started my own broker-dealer that was focused on raising money for blockchain-related companies. So raising equity investment mostly for blockchain companies in the space. And then some of the investors and I in that company spun off and created 2 Prime, which has been focused purely on the investment management part of the industry. Outside of that, I'm much more than just a crypto investor, but I like to run and I meditate a lot and hang out with my dog and girlfriend, and live out in Colorado in the mountains and try to stay balanced in an industry that's all over the place sometimes.
That's definitely important. That's good to hear because I think that sometimes it's a little easy to get addicted to screens, especially like with crypto. A lot of times I catch myself staring at prices, which is a terrible habit, but it's kind of fun, to be honest, to see where things are going, to read about it. But
yeah, I'm glad we have, a great CIO and team of analysts that can spend time staring at the screens all day. So I don't have to worry too much about the day-to-day price and can live like a normal human life. But I think addicting is definitely the right word. And it can be very consuming and kind of your whole self-worth and feelings of serenity or peace or value can really fluctuate with the volatility of Bitcoin if you get too wrapped up in it.
Right. Yeah. And that's something that I try to keep in mind. I mean, I'm sure back when you first got into Bitcoin, that was probably the temptation was there more, but it sounds like you're in a really good place now where you can kind of focus on some of the, larger view aspects of where this whole, I don't know what to call it, industry, I guess, blockchain space. I kind of struggle on like a term to define everything because it's changing so fast. But I was just kind of hoping to get your opinion on this space overall, kind of like the, where it's heading. I mean, I know you mentioned the volatile crypto market, and that's certainly something that maybe most investors are not used to, but when you look at how Bitcoin has been doing compared to some of the other traditional investment stocks, I mean, it's incredible growth if you go back to 2012 or even 2016. So how do you kind of bridge the two worlds of investments and then more of the digital asset investments and risk management and that sort of thing?
Yeah, so you covered a lot of things there. One, I'd say that, having owned Bitcoin and some other digital assets from 2012 on, I've been through a number of these cycles of the price going up 10, 20x in just a matter of a couple months or a year, and then, crashing back down and feeling that kind of jubilance and then fear, and then that whole cycle, which tends to, historically happen about every 4 years, is this kind of bull bust cycle. And so on one hand, I've just gone through that. And at some point you have to either go nuts or get a different job, or you have to come to some kind of equanimity about the day-to-day price of things. I think also, in working in finance for a number of years now, it's just a question of also time scale. If you're not worried about paying your rent for the next month or something like that, then it's fine if Bitcoin's down 20% this month, because I'm looking at longer term trends and thinking longer term. And just I don't know, when I used to run this startup in the crypto space, and every day it was the pressure was on, our venture money was running dry, and you feel this incredible amount of pressure to get things done. And then you interface with bigger companies, there's bigger opportunities or big financial firms, and the pace they move at is just so much slower. And I think that's one, because, they're bigger companies with more bureaucracy, more kind of entrenched in incumbent interests, but also because they're not in a rush to do anything. They're able to move on a slow timescale because they're not in a state of, they're profitable, they're not losing money, they're not running out of cash. And so there's a kind of, in physics, we call it an impedance mismatch, like a difference in type that just doesn't fit together. And so, I've just seen that over the years. So, in terms of how we kind of bridge, traditional and crypto finance, I would say that one thing I didn't mention in my kind of background was I've also worked at public hedge funds or public equity funds, and one of those was very focused on trading VIX derivatives. The VIX is a measure of effectively volatility in the S&P 500, and it's technically a measure of the ratio of puts to calls that are purchased, but it basically gives you a rough sense of the sentiment of the market. People buy typically more puts when they're fearful and more calls when they're optimistic. And so if you see a bunch of people buying puts, means the market thinks things are going to go down. And so there are ways to trade effectively derivatives of the VIX. The VIX is just a measurement, but there are ways to trade it with other products and ETFs. And so what I've learned through that, and what our CIO learned as well, who was the CIO of that fund as well, was that there's a bunch of strategies you can employ in any kind of high volatility product. It doesn't really matter the underlying, and be successful just using statistics and algorithms to make good decisions and look at historical trends. And so at 2 Prime, the first product we made was originally just to manage our own wealth. We had a bunch of Bitcoin and ETH, and I didn't want to go through another cycle of losing 70, 80%, or just in the last, as you referenced, in the last 2 to 3 months, we've seen about a 55% drawdown in the price of Bitcoin. That's painful and unnecessary if you're able to manage risk using options. And so when we saw the emergence of the options market with any real volume on exchanges in early 2020, we started trading that for our own money of about $40 million and got pretty good at it, taking a blend of statistical indicators from what we knew from public markets, like mean reversion or standard deviation moves, anything that suggests this is a statistically aberrational event is a good time to make a decision around a trade, either buying more protection or getting longer in a certain position. And so we've been able to hone some of those public market statistics that we knew and combine those with crypto specific ones, like flows on and off of crypto exchanges. The stock to flow model is another kind of macro indicator. Things like vol, the options market within crypto, things that allow you to kind of blend those with what we know from public markets to make a pretty good model around risk, and then able to hedge out downside risk in the portfolio. So that first product we started doing for ourselves, and then we launched it out to outside investors after about 6 or 7 months earlier in the first quarter of this year. I've raised about $100 million since then. And then we started looking at, what other things can we do with our kind of derivatives trading background that are going to be successful or interesting or allow us to have some kind of edge. And so the next one we've created, which is also pretty straightforward, is just trading the spot versus the future on Bitcoin, ETH, and some other top cryptocurrencies. And so it tends to be the case that the people will pay you for like, okay, I will buy a Bitcoin from you today for 4% more than the current price of Bitcoin if you give it to me in a month. And so no matter what happens, I have that price locked in. And so we're able to do that. So we'll buy a Bitcoin, we'll sell a Bitcoin a month from now, and maybe it costs 2% more. But if you do that 12 months in a row, you're yielding, 24%, which is often statistically where the yield is in Bitcoin and ETH and some of the other assets. And so 24% for a crypto investor is not incredibly exciting, but for somebody looking for low risk investment or investing in high yield bonds or corporate bonds, anything above 6% is pretty strong in our current interest rate environment. And so we've just been doing that as well. And, it's a very traditional trade, but it's just taking it and putting it into the crypto world and figuring out the nuances of crypto exchanges and how to move Bitcoin and ETH around different exchanges and how to sync that up with bank accounts and be a regulated fund. And so I hope that gives a kind of good overview of how we think about blending these two worlds and kind of how we're going about it.
You've got an impressive grasp of this space, and I've seen, many of your talks, all over the internet. Certainly, you've been all over the world. I know you mentioned being a technology advisor for Bill and Melinda Gates Foundation, even the World Economic Forum. I mean, this is a huge a movement that it's not stopping. I mean, people used to call it a bubble when I would bring it up in conversations, but bubbles don't last 10 years, 12 years. I think we're starting to see, at least from my perspective, some more, how should we say? I mean, regulation would kind of be like the overarching theme here, but the most recent, one of the G summits, I think that
G7.
Yeah, I don't know why I was blanking on that, but I was reading, governments planning worldwide regulation of Bitcoin, and I'm sure other, digital assets are to follow. And, we've seen things like, know your customer and those sort of things to kind of prevent money laundering, terrorists funding their operations, things that most people will agree is kind of a good thing. But it's not, I don't know if it's a realistic fear, but I almost kind of worry if maybe some of these regulations that may be coming are going to try to force, this crypto industry into more kind of like what we've seen with more traditional assets and more kind of like banking institutions and like basically kind of like compel people to follow the old way of doing things and maybe even revoke the licenses of those who don't comply. But I don't know if you can speak to that or maybe if it's too soon to kind of speculate on those kind of things. But where do you see, if we're talking about Bitcoin, we could branch into some other cryptos too, but where do you see Bitcoin heading with some of this more international attention from, governments and bank governors?
Yeah, I think the topic of regulation is, if I would have like 10 years ago and thought like regulation was interesting, I would have been like, what did you do with your life? But I think it is really interesting because it's kind of where technology and finance meet the law or like human society or social constructs. And those decisions, especially the kind of the devil's in the details and a lot of how we regulate money and has a huge bearing on the way that power is distributed throughout the world and how freedom is distributed. I think that, prior to this, I was running a broker dealer. And so I'm pretty familiar, at least with a lot of US regulatory law and have encountered a good amount. We have the fund itself is based in our various funds are based in the Cayman Islands. And so I have some experience with regulation abroad as well. And, I think a number of things. I think one is it just depends on who you are, like in a, society and what kind of actor you are. Like if you're a huge financial institution, your relationship to regulation and your interest in it and your limitations or advantages from it are very different than if you're like a poor person from El Salvador trying to, pay for lunch. And so I think it really strikes differently throughout society. The issue is, I think with laws in general, especially from a governmental approach to applying law or regulation, is that you're trying to create like black or white rules, but they're not equally applied to people throughout society. And so I guess that's my kind of overview thoughts on regulation. I would say that in the sense of Bitcoin, you know, in the US, there's relatively clear regulation. You know, we're a regulated commodity pool trader because Bitcoin is regulated as a commodity by the CFTC in the United States. There's pretty clear tax treatment on how Bitcoin is taxed in the sale and purchase of Bitcoin. And so I guess it depends if you're up to something nefarious or, you know, want to not be touched by government for a number of, you know, both maybe ill and good reasons, then that's a pain in the butt. But in terms of from an investment perspective, for us and for larger financial firms, they need to have some kind of assurance that, hey, there's rules around this. So if my firm buys $10 billion of Bitcoin, you're not going to tell me tomorrow that was illegal. And now I've, you know, getting sued by my investors for some terrible decision. And so it does give some legitimacy and some like oversight and comfort to larger actors in the space that there's regulation. But at the same time, you know, I think it really stymies and gets in the way of regular people transacting. Like I shouldn't have to fill out a report to move what is effectively my own money, right? It's Bitcoin. Like it's an asset. It's my property. Like why should I have to tell anybody about where I'm sending it? I think Bitcoin especially has had a bad reputation because like almost every new technology was used for kind of fringe cases like drugs or online purchase of, you know, shady stuff from the Silk Road. But that's the same way the internet was created at first, was innovative with a lot of pornography. Even the printing press, a lot of the early uses of the printing press have to do with sex and sexual literature. And so it's not unusual that happens and it becomes a threat to the status quo. And so people want to think that that's what it is because that's the first thing they see related to it. But increasingly, I think that, you know, I think it's also like, you know, the internet, like you can try to quote unquote regulate it, but it's not in a single place. And in Bitcoin, the same thing. There's not like a switch to turn off Bitcoin. In fact, we just saw China effectively ban Bitcoin mining in the last couple of weeks. And nevertheless, the Bitcoin network continues on. And those miners are moving their mining rigs to places where it's more crypto friendly. I think what's interesting from a national perspective around regulation is there's competition. And so like, okay, maybe the US as an incumbent, the largest economy in the world, they don't really care to get the Bitcoin like money into their tax system and into their regulated financial system. But there are second and third tier countries that are more willing to be innovative, just like you have second and third tier telecom companies or banks or any kind of company that's willing to take more risks because they're not the dominant player. And so you see countries like Malta or Liechtenstein or the Isle of Man, wherever, that is willing to take a little bit more risk on the regulatory side because they have nothing to lose. And so you're going to see this kind of, I mean, what you've seen is regulatory arbitrage where the companies like Binance that have the funds to do so find and create entities and jurisdictions that allow for them to participate. And the thing about Bitcoin is like, you know, again, there's nobody that can turn it off. And so those countries are going to benefit until the other players decide, hey, this isn't something we can get rid of. We better figure out a way to at least put some reins on control over it. And so certainly there's going to be bad actors in the space and regulation is going to have no bearing on it. I mean, Bitcoin is, if you want to move money illegally, you can move money illegally with Bitcoin, with US dollars, with gold, like whatever you want. In fact, there's more money, far, much more money laundered using US dollars than there is anything probably even close to the amount that of Bitcoin transactions. So yeah, I think it's just what's like nefarious. A lot has to do with what's acceptable in society, but not really that tied to reality necessarily. And I guess that's a long way of saying I think regulation generally is a good thing for our fund, but also I don't think there's any risk that Bitcoin's going to get shut down, nor is there any real way to do so. And so, yeah, I guess that's what I would say.
All right. So if you've enjoyed this episode so far or any of our other episodes, please consider helping us out by taking advantage of this offer from Manscaped, who is the best in men's below-the-waist grooming champions of the world. Manscaped offers precision-engineered tools for your family jewels. Manscaped just launched their fourth-generation trimmer, the Lawnmower 4.0. You heard that right, the 4.0. Join over 2 million men worldwide who trust Manscaped with this exclusive offer for you. 20% off and free worldwide shipping with the code BLOCKCHAIN at manscaped.com. Imagine shaving with a sleek, well-designed, and optimized trimmer that makes shaving time your favorite time in the bathroom. It's a little strange to admit, but I'm one of the first people to try the new 4.0, and I'm blown away by the performance. The craftsmanship and the details on the 4.0 are next level. I'm sure if you've heard the last few episodes, you've heard me tell stories about hurting myself with a inferior trimming product. But it's not really the case anymore with Manscaped. They've engineered the ultimate groin and body trimmer by focusing on intelligent functionality and an incredibly comfortable grooming experience. Their 4th generation trimmer features a cutting-edge ceramic blade to reduce grooming accidents thanks to their advanced skin-safe technology. I now feel confident shaving my boys. This upgraded trimmer includes a multi-function on-off switch that can engage a travel lock. It also gives you the ability to turn the 4000K LED spotlight on and off when needed for a more precise shave. The Lawnmower 4.0 even allows you to customize your trim through additional guard lengths with sizes 1 through 4. Did I mention wireless charging? The new wireless charging system uses electromagnetic induction, which can help battery length last longer. Men, if you've been shaving with the same nut trimmer on your face, you've been doing it wrong. No person wants to end up with pubes in their mouth. It's time to get your own ball, hair, and body trimmer with Manscaped to make me time the best time and enhance your confidence with some nice, smooth boys. Get 20% off plus free shipping with the code BLOCKCHAIN at manscaped.com. Your balls will thank you. Remember, you can get 20% off and free shipping with the code BLOCKCHAIN at manscaped.com. Unlock your confidence and always use the right tools for the job with Manscaped. You mentioned some of the international scenes, like El Salvador. And I know that recently, they started accepting Bitcoin as legal tender there. You mentioned some other countries that were crypto friendly. That's kind of a huge implication in my opinion, but what do you think about that, in terms of the significance of El Salvador adopting Bitcoin? And do you think other countries might follow suit in the near future?
I used to live in Panama, which is, not far away in Latin America. And, especially in Latin America, there's a long history of the U.S. using economic and financial means to control and dominate foreign countries. And, when countries don't comply with it, in the case that we've seen in Panama or we've seen in Guatemala, the U.S. government's taken military action to get what they wanted anyways, calling people like communist dictators, even though they were liked by the people in their countries. And so it's not surprising that Latin America particularly is interested in finding alternatives to the U.S. dollar to finance their country's development. The U.S. government, by design, and China does the same thing, funds countries effectively like bad loans that they have a low chance of ever being able to pay back. And the implications of default is having their country's sovereignty usurped by the U.S. government or its proxies like the IMF. And so for the case of El Salvador, I think that, their new president's been trying to innovate and create a lot of development, which costs money and has kind of run up to some limitations in his ability to get his Congress to approve additional U.S. funding or additional debt. And so he started to look to alternative means to do so. And Bitcoin is an obvious alternative, both the ability to mine Bitcoin, which they're starting to do using geothermal energy in the country of El Salvador, as well as the ability to attract entrepreneurial and energy and entrepreneurial spirit into the country and to reduce the cost of remittances and other kind of basic needs of the country all makes sense. And even if like the country of El Salvador or other Latin American countries still are going to obviously have an interest in US dollars and it's not like they got rid of the US dollar. That's the other sovereign, their other national currency of El Salvador. But nevertheless, having some kind of optionality or an alternative allows them to have sort of an escape plan or, just a better negotiating position when they're looking at bad loans from International Monetary Foundation or the IMF rather, or other international investors. And then, potentially creates a bit more sovereignty and is a money that can't be controlled or locked down and gives him more political power. I think we'll definitely see other countries start to do the same. I believe there's already a bill in the country of Paraguay that is proposing to do the same. And then won't name names, but I've personally spoken to the central banks of a few other governments that are considering doing something, or at least, very curious about what it all means and why one might go about it. And so I think especially as you see a more millennial leadership around the globe, you might see people more willing to adopt it. The other thing about Bitcoin is it's a very patient technology, right? Like it doesn't care if a country like El Salvador adopts the money or not, or if China bans Bitcoin. Like it's just going to keep doing the thing that it does inflexibly with the same rules and the same code. And so there's sort of like a relentlessness to it that it's going to be consistent and reliable. And I think that over time is just a powerful thing that shows up. And it might not happen next week or next month, but slowly and surely, I think it starts to eat more of the financial system or incorporate itself into it.
And you said a lot there that's just really interesting. I saw some of your other talks comparing Ethereum to oil and Bitcoin to gold, and I thought that was a great comparison. And I know we've been talking a lot about kind of a broad view here, and I think that's important because that's really what it's all about for people who are trying to adopt these new methods of digital assets. People who are in it for the long term kind of have the mentality to withstand this volatility that we're talking about. I do want to talk about Two Prime a little bit more, but Bitcoin and Ethereum, my two favorites.
The classics.
OGs, there's other coins that are available, and I definitely have my favorites among the altcoins. But why do you guys focus on Bitcoin and Ethereum, just to kind of play the devil's advocate a little bit here?
We have two funds, right? The digital assets fund, which is Bitcoin and Ether only. There's sort of one macro reason for it and one sort of market structural reason. The main kind of limitation is just that whole product is focused on risk management using options trading, and there is no options market at any kind of volume for anything other than Bitcoin and Ether. And so it's just pretty, there's, even if we wanted to add 5 other things, there's not 5 other cryptocurrencies that have options markets that can meet the kind of scale that we need to trade on. And then secondarily, Bitcoin, 90+% of all apps are built on the Ethereum network. And so, you have pretty good macro exposure to the whole cryptocurrency or digital assets ecosystem through owning just Bitcoin and Ether. And so from a diversification perspective, you kind of have macro diversification through owning Ether just because of the way that, the currency works within that network. I think that as we see the industry continue to mature, we'll see other unique cryptocurrencies, things like maybe Chainlink or Uniswap, or things that have a different value proposition from Ethereum and Bitcoin, and perhaps we'll consider those as we see an options market emerge. But right now, that doesn't really exist.
It's very good, man. I was curious about how the growth at Two Prime has been despite the I don't know what to call it, the last couple of months. Ever since Elon Musk's tweet, we've definitely sensed a change in the force. But what's going on with your growth and some of the implications? I also wanted to ask about the liquid yield fund because liquidity is something that I constantly try to understand how different people go about it. So if you wouldn't mind talking on those two things.
Well, first of all, let's say, Elon Musk tweeted something and then the market went down afterwards. But if the market itself wasn't in an overbought position, it wouldn't have done that anyway. And so it's not like just Elon Musk, like the whole market moves on Elon Musk's tweets. It might be, that's like the outward facing event that precipitated a pullback, but the market was way overbought. We were like 7 standard deviation move over the last month. And so, even though Bitcoin and ETH go up a lot, sometimes they're not like, they can't defy gravity. Things go up, they come back down. And so there was a lot of other market factors other than just him tweeting that I think contributed to that pullback. That being said, for our fund, if Bitcoin only ever went up, then a fund that managed risk and used options for downside protection really wouldn't have much value. And so we've, done quite well. Like in the month of May, Bitcoin was down 35% and we were down about 11%, which, it's still down, but a third is much down. And that's kind of the value proposition of our fund is we're going to be down a whole lot less than if you just own these things by themselves. And so it's times like that when there's a volatile market or a big pullback where we get to kind of explain and have, everyone's a genius when everything's going straight up and nobody wants help and nobody thinks risk is a thing. and when things pull back is when people kind of see what we're doing. It makes a little bit more sense. And so, it's only contributed to our growth and kind of the strength of our value proposition. In terms of the liquid yield fund, the purpose of that is much more like a money market or short-term corporate treasury or financial treasury management tool. And so the idea is like, no, you're not going to, our main fund was up just under 500% last year, which is not because we're geniuses, but just because Bitcoin and ETH were up a great deal as well. And so the liquid yield fund is not like that. The target is a 9% yield, and I think we'll outpace that. But the first 9% yield goes to the investor, and anything above that, we split with the investor. But yeah, the idea is, you have to have some money that, especially if you're a corporate treasury or a large financial institution, I can't have all my money in something that goes up 70, 80% in a month and crash to 70, 80% in a month. It's just too much risk. But like I was saying before, like right now, because interest rates are incredibly low, it's very hard to find high yield investment products that aren't, super risky. And so our ability to take advantage of some of the market dynamics and trade spot against future is a very known and well-known trade in the futures markets, taking advantage of contango. And so just applying that to the crypto world and offering something that you can get in and out of pretty quickly, that's going to make you a whole lot more than you'd make from, interest in a bank account or any kind of corporate bond is the idea. And yeah, it's been well received so far.
Wow, that's excellent, man. It's not really something that I can take advantage of. I would like to get to the point where I would be able to use your services. But, when you talk about investment advisors or, high net worth individuals or families, offices, some of these larger corporate interests, the parallel kind of reminds me when we were talking about the global state of finance and cryptocurrency and how complicated it can get. It's like, it's almost, it's a cliche, but like more money, more problems. It gets to the point where you need some of these services. And that's why I wanted to have you on, just because I know we have people listening who are in the situation where, if they get involved, they're going to need a service like 2Prime. So, there's things that like people living paycheck to paycheck, they're not really, they have their own problems. They don't really, but someone who does have access to like, maybe like generational wealth or something like that, and they want to pass down to their family, there's a lot of things to consider, like taxes, regulation. We talked about a little bit, the structure and gaining exposure to some of these like highly volatile assets like Bitcoin and Ethereum. I mean, it can be kind of confusing is what I'm saying, is for someone who's not used to it. So I definitely see the merit.
And I think like, it's depends, kind of personally where people are at, but or companies or whatever, but we're in a very difficult situation for money managers in the sense that we have inflation that's going out of control. It's publicly stated by the Fed at somewhere around 3 point something percent, 3.4%. I think the reality is that it's much higher than that. The value of my house has gone up 26% in the last 6 months. So there's the value of stocks has gone up way more than it should have, and so there's uneven inflation, but inflation happening way beyond 3%, 4%, which means my dollars buy 3-4% less every year unless I grow it that much. At the same time, we have interest rates that are very low, and so I can't put my money into government bonds or even corporate bonds in a way that's going to potentially even keep a pace with inflation. And so effectively everybody's getting poorer. So even if your money's making 3 or 4% a year, your purchasing power is going down. Like you're getting poorer in relation to, what you can buy or where your money will take you. And so there's not a lot of great options. There's a ton of, I think about a third of all the money ever created, US dollars ever created, was created in the last year. And so that's effectively what it means is the dollars that you have are worth a lot less because there's a lot more of it available in society. And so, finding places to safely put money that they don't have to earn a 500% a year, but can do 9, 10, 15% is increasingly difficult thing to do.
Man, it's fascinating. I really appreciate you taking the time to explain some of these things to me.
Yeah, it was really a pleasure to speak with you. I think, thanks for the questions and hopefully it was helpful.
Yeah, if there's anything you want to leave us with, or maybe like places where people can go to learn more or connect, or, maybe even utilize some of your services, please feel free.
Yeah, I think the easy thing is just to go to our website, which is 2prime.io, TWO prime.io, and there's, a contact us stuff on that website if you want to get in touch and kind of see more about our products and offerings, as well as who's behind the team and stuff. So other than that, people are happy to reach out, and we're always available.
Alex, it's been a real pleasure having you on. This is a space that a lot of people are still learning about, so it's always valuable to have an expert on to kind of bring us up to speed. Yeah, I just want to thank you again, man. I hope you have a good rest of your day.
You too. Thanks, Ethan.
Support for the Blockchain Show is brought to you by Manscaped. Join over 2 million men worldwide who trust Manscaped with this exclusive offer for you: 20% off and free worldwide shipping with the code BLOCKCHAIN at manscaped.com. That's 20% off with free shipping at manscaped.com and use the code BLOCKCHAIN.